All right, we are going to get started here. Top of the hour. There's going to be a few more people that wander in as usual. Again, we're going to be recording it, so you'll be able to watch it on our YouTube channel, Joel's Mortgage Team YouTube channel. We're trying to put more content out there as we go. If you have any questions, again, you can put them in the chat box. The option exists both for private messages and for direct messages. Private messages obviously just go to me, and we can address them for your personal situation tomorrow. Actually, other questions you might have on what we're talking about tonight is going to be in there as well. So that is how that works. Everyone's mics and videos are off. So just so you're aware of that, we won't turn them back on at any point. We'll just have you reply in the chat box. We've done that before, and it's certainly not perfect sometimes getting all the voices going. So thank you so much for taking some time. I know in some places it may be very nice outside and it's 6 o'clock and all that type of thing. So we appreciate you taking some time. Tonight, as per the message that you've gotten, the email, I am hosting Randy Forbes, who is the director of 460 MIC, which is located in Nanaimo. And I'm asking him some questions just around what a MIC does, and we're retying in how we can make that work personally for your situation and what's involved with it. Now, there is a lot of MICs throughout British Columbia, but 460 MIC is the number one MIC that I use for our clients. So not just for investment purposes, but it's the MIC that I use the most for our clients when I'm using for lending purposes. So it is a lender. And I'm going to bring Randy in, and we're going to cover some questions. And then at the very end, after I've kind of covered all my questions, I'm going to give you the you guys want to have some questions. And that would be that would be possible as well. So Randy, thank you so much for taking some time for me tonight. I know that you're busy as I am, and I appreciate you giving me some time tonight.
Hey, it's great. Glad to be here. I think I missed the last one. Sorry.
Yeah, no problem. So tell me exactly, I know what it is, but just for everybody tuning in tonight, explain to us exactly what is a MIC and how is it different from your regular kind of conventional lender?
Well, so there's two sides to the MIC. I think that's interesting. So you have the investor side, which is people investing, and then you have the borrower side, of the people we lend money to. From the investment side, it's a little different than a lot of things, because we basically take investors' money, pool it together, and lend it out in mortgages, in our case, throughout British Columbia. For borrowers, we are a higher rate, but an easier access of funding for a lot of things. Basically, usually based on a short-term loan, we're simpler than the banks, although more and more we've become regulated through BCFSA and Canadian Securities. But basically, we're just an easier group to deal with when you're looking for short-term money to help you through a situation that the banks won't help you with.
Right. And talk about what is, a lot of people, when we're thinking about, first of all, on the investment side, and we're telling people, hey, a MIC is a great investment. Talk about, obviously people are always looking at risk tolerance. So your particular miss, if you were approaching it from, your run-of-the-mill, borrower or consumer, what would be, how would you explain to somebody on where kind of the risk tolerance is? What is the risk? Obviously, there's never no risk, but what's the risk of my money being pretty safe in a MIC as opposed to another investment?
It's funny. We run a MIC. I think a broker told us a little while ago, we're like the A lender of MICs. It means we vet our lending policies quite strongly. We keep our loan to value, which is the amount of money we'll loan against the value of a piece of property, as low as possible. And our returns have been traditionally very good. Over this MIC, I ran another MIC before this. This MIC we started in 2014, and our average return to our investors has been just about 8%. It was a little lower last year because of COVID, but it's, I've got money in it. I like it. BC Securities came out about a year and a half ago, and they lumped all MICs into an exempt market product. Now, people won't understand that, but basically we are lumped in with other products that are considered a little bit out there in the investment opportunities. So BC Securities and Canadian Securities said, if you're going to invest in our MIC, you must be approved by an exempt market dealer and a dealing representative. So, 20 years ago, when I first started the MIC I ran before, anybody could come in and put money in at any time. There was no questions, no vetting, no anything. That you could just walk in and put money in. You could put money in through your RSP, through your TFSA, or just cash, or through a company account, whatever you want to do. Now, in order to put money in a MIC as an investor, you need to be vetted by a dealing rep based on an exempt market dealer product. And we use a company out of Ontario called Belco. And they basically tell you the risk tolerance that you should have given the amount of money you have, what your job is, what your age is, and they will either approve or disapprove of you investing in our MIC. Ours is a little bit different because we run it differently. We have a great board of directors, diverse all across Canada, and we do spend a lot of time. We're more interested in the return to our investors than we are to getting bigger.
Right. So, I mean, I don't know if you just said it or maybe I just knew it, but if I'm not mistaken, is your average loan to value is around 60% LTV? Is that right?
I think across the board. I've actually got stats from last year. We're coming up to our year end, so we don't have the current ones. But I think our average across the board loan to value is about 55%. We have some higher, nothing greater than 70%.
Yeah.
Our average is about 55%. So that means in our overall portfolio, if you worry about the risk of a real estate market collapsing, which lots of people talk about, it hasn't happened since I started 45 years ago. But if you're worried about it, it would have to drop some 35, 40, 45% before it would impact the recovery of our money that's out there in mortgages. So that's pretty secure.
Absolutely. So yeah, so to clarify that further for people listening, and basically what that means is that for every $100,000 in house value, they're only lending average of $55,000. So if you have a house worth $100,000, they're only lending up to $55,000 on. So even if a borrower goes sideways, defaults on that loan, there's a lot of room for that house to sell or something to happen before that money, your money's at risk. When you think about that, as opposed to other investments like the stock market or something like that, you have a lot more. If I look at my stock portfolio this week, I've lost money this week, that I didn't have last week, right? So,
well, I personally, I think a diverse portfolio is good. In the banks now, GICs, those kind of things, you're hovering around 1%, give or take. That's not a very good return if you saved a bunch of money up and trying to get a return on it that's going to help you in retirement or help you, live a better lifestyle. The MIC at 7.5%, 8% kind of number we've been returning, that's a pretty good return to help you leverage your cash in a better position.
Yeah. So you're talking, so year over year, 8% return on money. And so, talk about you kind of highlighted that, but there is different ways that people can invest in MIC. What's the minimum dollar value that you take for investment?
In our case, minimum dollar value is $5,000. And the reason for that, unless it's cash, you need to have a trustee that holds your funds for you. And the trustee charges you money. And I think the current trustee rate is about $125 a year and $125 startup. I haven't seen the latest ones. They may have changed a little bit, but somewhere around there. So if you put $5,000 in and got a 7 to 8% return, let's say 7 because I'm a conservative guy, that's $350. And if it costs you $250, that's really only a $100 return because you got some costs. So anything less than that, it doesn't make any sense for investors to put in and have to pay to a third-party trustee. If it's cash, it's a cash-on-cash return. So we issue all the net profit of the company out every year. August 31st was a year end. By the end of October, we will distribute either by way of new shares or by way of cash all the money we make. So we don't retain a profit. We don't make a profit. We pay all the profit out to our shareholders. You can put in what we call a DRIP, which is a dividend reinvestment plan, or you can take the cash. It's up to you every year.
Right. So you can invest in a MIC up to, you have to have a minimum $5,000. It's going to be cash. You can direct your TFSA over to a MIC. You can direct your RSP. So when you're thinking about so to make sure I have it clear, you can take your RSP, whether if you have it somewhere else, and it can be directed. You're not liquidating your RSP or anything like that.
No.
You can instead put your RSP right into the MIC, rather than have it, in some other fund or something like that, right? So
you can do that. You don't take the money out of your RSP, otherwise it'd be taxable. So it's turned into cash and put through a trustee. We use a couple of trustees that work with us. Olympia Trust and the other one, Computer Share Trust. And they're two trust companies. I think they're both out of Alberta, right. And they run your trust for you.
Right. And is there any other type of investment vehicles, such as can RESPs be put into the MIC and that type of thing?
Yes, any registered fund can be put in there. Okay. So it's all run through a trustee. Like I say, we don't handle the money. We just send them the share certificates and get your money from them. So everything's through there. We have a myriad of investors, from 5,000 to $1 million. So we have a very broad range of people who invest in our
right. MIC. What's your typical individual that might put money into a MIC, as far as what they're trying to accomplish?
Well, I don't know typical, but I always use the example, and I'm older now. You can tell by my hair, but I remember when I was maybe your age, maybe a little bit younger even, somebody said, boy, if you could raise, put $500,000 away and get 12% return on your money, that's like $60,000 a year. What a great lifestyle. You can live with $60,000 a year, 12% on 500,000. And if you could ever get to be a millionaire at $1 million in investment money, then you get 12%. Well, that's $120,000 a year. Boy, Bob's your uncle. The world is your oyster. You could live a pretty good life. But now that same investment, at a bank or somewhere else, oftentimes will get you 1.25%. And that $500,000 is now $5,000 a year, which really won't even buy popcorn. So a lot of people are looking for a bit of a bump. I think a lot of people are looking for a variable portfolio. You should. I wouldn't suggest anybody put all their money in anything, let alone a MIC. I run it, and I still don't have all my money. I've got mine spread out through different things. But in terms of a bumping up the return in your overall portfolio, this has been a nice little addition. So it's across the board, but different people, older, younger, starting out. We own a real estate company as well, 460 Realty, and I tell all my young realtors, you will find out as you get to be my age, 67, the compounding effect of interest returns on your investments is a big deal. And there's a rule of 72. You probably know that, Joel, that says if you get 8% return, that means you would double your money every 9 years. Yeah. You divide the return into 72, and that tells you how long it takes to double your money. So if you're a young person now and you put it in and you could achieve an 8% return, that means every 9 years you're going to double your portfolio without doing anything. So old people trying to get a better return, young people trying to get an investment somewhere down the line that will become a significant number when they go to retire.
Right. And how it works is that you could leave your money in the MIC and it just continues to compound. It gets bigger and bigger and bigger. But can you take it out as a monthly, do you guys pay it out as a dividend, or do you pay it out as a monthly deal, or how does it get paid out?
We only do it once a year. And when we started this MIC, we looked at doing it monthly, but the cost of doing it with all the accounting was just too great. It just cuts into your investment. So we set this up to pay interest out, the profit to our shareholders once a year. Year ends in August. Usually we pay our profits out by about the first week of November by the time the accountants do all the work on it. You get to, like you said, you get to decide whether you want. Now, if it's an RSP, if you take it out of your RSP fund, then you've got to pay tax on it. So you'd have to go through your trustee and take it out. If it's cash, we would just give you the return, whatever your return is for that year. You can take it out in cash, or you can reinvest it in the MIC by just turning it over into shares.
Oh, okay, right. So once a year, you have the option of taking out cash, reinvesting it. All options kind of exist, depending on where you have the money. The money in from that perspective. Okay. Yep. And so now, as far as someone getting set up on them, is it a very big process when somebody wants to put money in? Does it take a long time? Is it instantaneous, or what does that look like?
Well, we have, like I told you, we have an exempt market dealer, Belco, that deals with people who want to invest. And we have a dealing rep right now, dealing representative, who's a lady named Lori O'Shea. She works for us, and she meets with people, either online or personally, and goes through their portfolio to find out if they qualify to invest. And it's really a matter of just sitting down, going over what, how old you are, what your job currently is, what your equity is in different places, your assets and your liabilities, and make sure that if something went wrong, you wouldn't be in a position where you would be, would be detrimental to your wealthy health.
Right. Yeah. So, really a lot of options to do it. Certainly there's a caveat on it, but we have a lot of clients, if you're sitting on even a lot of equity in your house, and we're taking the money out at 1.5 and you're putting in the MIC at 80%, it's a pretty big spread.
You can do that. It depends on your ability to sleep at night with investing. And of course, everybody's got their own thing. And I tell people, don't do anything that's going to keep you awake at night, because it's no fun. So, but there's lots of options, and lots of different people look at it a different way. And certainly that's a way you can look at it.
Absolutely. Well, that is all the particular questions I had in my mind. Now I'm just going to open it up. If anyone else has any other particular question what we talked about as far as a MIC, feel free to put that in the chat box, and I'll just address those with Randy. Now, you can do it by direct message if you choose for your own situation, or you can put it in the big box, and that just means that it's not as private. So if there's any other questions, where does your particular mortgages, what parts of BC do you particularly put the MIC money in? Like, is it properties in Vancouver that are like $5 million, or where are most of your investments going?
Really across the province, Joel. We do a number up in your area. We do a number on the island, because that's where we're from, so we understand the island. We have British Columbia, we have Northern BC, we have, kind of Central Ontario. We really look at, we're from Nanaimo, so it's, although I've got a director in London and a director in Vancouver and a director in Whistler, so we've got a pretty good group of people that understand all parts of the province. So it really depends on the file. We look to the loan to value, the amount of money they want to borrow against the value of the property, and the covenant of the borrowers. What's their credit rating? What's their job prospects? What are they doing on that level? And we have the ability to put mortgages anywhere in BC, and we really look at it across the board on a number of things.
Right. And of course you have a board of directors, and that's 6 people, right?
6, including myself. Yes. Right.
And there's a certain amount that have to say yes to a loan before you'll do it. It's not just like, if one person likes this, it's got to be, a pretty meaningful amount have to say yes before you'll go ahead. And every loan has to be approved by your loan committee.
Exactly. We have an online process called Mortgage Automator, and we don't fund any directly, or very few directly. I'll say none. We deal with brokers such as yourself and brokers all over BC. So they send us the files. We aren't actively out there looking to lend money directly. So they put a package together, send it in. We put it on our Mortgage Automator app, and all of our directors will go. We've committed to within 24 hours for all our directors to look at the app and make comments online, and then I make the ultimate decision based on a minimum of 3 of us that like the file.
Right. So you do have to have, they don't just go ahead just because there's no real risk of someone, feeling too much compassion for something, or, from that perspective,
Yeah. Well, compassion is, there's no place for compassion in this kind of business. Certainly it's got to be a business decision. And sure. Although you have compassion, it just doesn't fit with these kind of operations.
How many of your loans do you think have ever gone bad, where you, like, what percentage where you've actually had to take the for
I think 2. I think 2 is all we've had to go bad. And the first one was already paid out. The second one was it was a construction loan in Seychelles, as a matter of fact. I think just to give you details, the mortgage is $500,000. The property is appraised at $880,000. We are trying to get the thing completed. There's a second mortgage behind us of $160,000. People won't understand all this necessarily, and there's an offer on the property for $850,000. So although we wait longer to get our money back, there's a zero chance of losing money on or very slim chance of losing money in this one because of our equity position.
So to be clear, we're talking about 2 files going bad, but not 2 files that they would lose money on. Just they have to go through the process. Someone asked if they needed their money back, what are the options if you need your money back? You put your money in, how quickly can you get your money back?
That's a good question. So because we put our mortgages out for 1-year terms, we like to have all our money out because that increases our return. We have some penalties if you put your money in, you want it out the first year, we reduce your return by 2% to cover our cost because we have to do a bunch of securities issues and those kind of things. After this, for the second year, if you want your money out, you would lose your return by 1%. So if we're going to get a 7% return, the first year you'd only get 5 if you took it out for the number of days you had it in there. The second year you would only get 6 for the number of days you had it in there, and after that you're free to take it out whenever you want. We do retain the right to wait for up to 90 days to pay you because, again, we're always trying to get all of our money out. So sometimes we've got all our money out and we have to wait for mortgage to pay out in order to pay out the money to the investor.
Mm-hmm. Mm-hmm. Right. But it's still relatively liquid compared to other things for sure.
It's, right? We haven't had anybody that didn't get out their money that asked for it. And we try to do as quick as possible. But again, it's a business decision. So if somebody wants money out right now, we have a line of credit and we can pay the money out immediately if that works for us. So we haven't had any issues with that, but it's not liquid like it's tomorrow because right now we have all of our money out. We're being our line of credit tomorrow. So if people had $500,000 and wanted it out, we wouldn't be able to do that for about 30 days. We have a mortgage coming up the end of October. So, and then we pay it out to you.
Yeah. Yeah. I mean, they're 1-year terms. So mortgages are getting paid all the time. Like I know a couple we have with you guys that I think we'll end up paying on 60 days right now. So, so I got that. Said you're out of money. I'm going to have to keep those until I need them before I get those paid.
Well, we're happy to have them pay out because we can put them back out again quite easily. This business, the mortgage, this mortgage market, the banks have gotten tougher and tougher. So more and more people are, having to go through secondary lenders. So we find lots of applications. We get 2 or 3 applications a day right now. We vet them and we approve about maybe 30% of them, Joel, somewhere around there. Yeah. There's some you just won't fund no matter what the deal. And some there's an equity position, but little chance of ever paying it out. So there's lots of things we look at. Sure.
Yeah. So you said, so after 1 year, there's no admin fee for paying it out, right?
On the second year, after the second year.
After the second year. Yeah.
Yeah.
So after the second year.
Yeah.
The price say 30% because I feel like we get approved more than 30% when we send your way.
Well, you do, you have, we like you. We have lots of files and we don't do any favors for anybody, quite frankly. I'd like to tell you we love you and we'll do anything for you.
Yeah.
But it's, I think one of our directors, Greg Noack, who you know well, he says, that the brokers think we're a mortgage with an A-lender mentality, which has proved to be a good thing for us because we've had a number of brokers and a number of borrowers who come back sometime later and want to invest with us because they see the work we do for the files when we fund them.
Yeah, I would say from my perspective, there actually is a lot more mix out there that are even more paperwork intensive than you guys are, which actually speaks to the irony is that a lot of people think a lender like you from the borrower side is the loan sharks and the stuff they see on late night TV. But actually, it's not as simple as, hey, we're just lending on anything, anywhere, at any time. Like, it's like another Mick guy said to me, he says, it's fine to lend money out. Getting the money back is a whole other thing. So, how rigorous and stuff, you are with, making sure those loans come out. And I know that even my own personal philosophy has really changed in the past couple of years where I become less concerned about making an enormous return on things and more concerned about making sure I just don't lose money. Right.
Well, so last year our return was just over 7. But when COVID hit, we weren't sure what was going to happen with the market. We didn't know if the real estate market would die or what would happen or people would panic and want all their money back. So we just held back about a third or about 20 or 30% of our portfolio, we just held in cash just to see what was going to happen. And what that did, it lowered our return because we didn't have the money out. But when we talked about it as a board of directors, we said, would people rather have a 7% return rather than an 8% return and have little or no chance of losing all their money? And that was the decision we made. So we got the lowest return we've had, 7.01%, I think it was. But we felt very confident in the conservative approach to holding money back to make sure we knew what happened with the real estate market.
Yeah. Well, that's great. If there's any other questions, please do put them in the chat box. We are going to send out all the information to everyone that's attended or didn't attend, so that if you want to reach out to 460 and get to the process of putting money in there. So, Randy talked about, you can do that through your RSP or TFSA. It's not about saying, oh, I need to have some cash in the bank. You could definitely speak to us with the idea that we might, leverage some of your equity. That's a big thing we're doing right now, is that, how do we look at people's equity and how do we, make sure that's working in the best possible way. I look at mix, really being something, if I don't want to do real estate investing where I have to have tenants or some of that, it is a way to do real estate investing without having to be involved in tenants. Remember, if you're putting your money into a MIC, it's going to a fund. You're never going to know those borrowers. You're never going to know, those parties should become removed. I know I've done some private lending myself for mortgages, and just like, the borrowers knowing who you are was quite a psychological thing that I didn't really like that much, to be quite honest. I much prefer them not knowing us. So it's a real good entry level way into real estate investing. So we'll send all those details to anybody as well. Else you want to add, Randy, before we sign off here tonight?
Well, I was just going to say, a number of people who have invested with us were previous private lenders, and they were lending out one-up mortgages, right? The mortgage is individual property, but the risk in that is much greater than the pooling we do. So we'll have like 70 or 80 mortgages, and the money's spread there. So even if one went bad, it would not affect your return that great. But if one went bad, it was your only one. That's not as much fun. So we've had a number of private mortgage holders who decided that spreading their risk around was a much better idea, and the pain of it was non-existent. Yeah,
absolutely. Well, thank you so much for making some time, Randy. Totally appreciate it. Again, if you have any other questions, we're going to send everything out. If you have any questions, feel free to reach out directly. If we'll send the information, but 460 is very accessible online. Their process and everything like that. So if you can simply search 460 MIC and it will come up right away. So thank you so much, Randy, for your time tonight. I totally appreciate that. All right. And we will talk to you soon. And thanks everybody else for attending, taking some time out, and appreciate you as well. Again, we're going to put this up a recording if you want to review it, maybe with your partner or something like that at some point, or somebody else. That is more than available to you as well. So thank you so much, everybody, tonight.
Thanks, Joel.